Got to start with Jay Powell. Wall Street took his comments yesterday as opening the door to a rate cut. Do you think that door is open?
I think it's early to make a judgment on that. We're going to be very vigilant about understanding these heightened trade tensions, see if they feed through to the economy. Most importantly, see if they persist. And so I think it's too soon, though, to make a judgment as to whether we might or might not take an action. I'd rather be patient here and let events unfold a little bit more.
Well, investors have priced in 3 rate cuts, and Wall Street economists over the weekend basically joined the consensus that you're going to cut rates. You've been in the watch and wait camp. What would tip the balance for you? When would you think that you need to make a decision?
I would need to see some evidence that there's a deceleration, or further deceleration in the economy. We've expected that growth would slow from 18 to 19, but we're still growing above trend. We're still seeing a tightening in the labor market, and our Dallas Trim Mean, which is our measure of core inflation, is now at 2%. We think we'll end the year around 2%. So I would need to see some evidence that there's a worsening in those trends. We may well see it. I'm on watch as to whether we see a further deceleration, but that's what I'm watching for.
Well, data are lagged. Cost benefit, what's worse, cutting too early or waiting too long?
So it depends on where you are in the cycle and what our stance is. And my own assessment of our stance is we're in the neighborhood of neutral right now. So if we were to cut, that would be me making a judgment that we need to add stimulus to the economy. That might ultimately be a judgment I need to make. But if, on the other hand, you've got a restrictive stance and you decide to cut, that's something different. Or if you're highly accommodative, it also is a different judgment. But right now, we're pretty much of a neutral setting. And the question is, should we be adding stimulus to this economy? That's a question I'm asking. I'm open-minded about it. I think the risks to the downside in the last 5 or 6 weeks have increased because of these heightened trade tensions. So I'm watching it very carefully. But that's the judgment and that's the question I'm going to be asking.
Well, they say that the Federal Reserve decides when to raise rates, but markets decide when you're going to cut them. How much pressure do you feel from markets right now?
I've spent my entire career in the markets, as you know, and I've learned that markets can change on a dime. For example, there's been a dramatic change in the markets since May 1st, or approximately May 1st, last 5 or 6 weeks. And as we've seen, you could see a dramatic change in a different direction over the next 5 or 6 weeks. For example, what's happening to the Treasury curve, I think, is very much in response to heightened trade tensions. And some of those decisions or some of those tensions could be reversed in the next several weeks. So I've learned to watch markets, but I don't want to overread or overreact to what they're saying, and because they can change on a dime.